Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. I'm feeling a little bit dejected today, and that's because I unfortunately read some news. And this news has got nothing to do with Occidental Petroleum. This is news that's directly related to GameStop. And GameStop has been in the news so much; it's very difficult to actually even avoid the news. But anyway, as usual, I report, you decide. I'm going to share some news with you. You tell me what you think in the comments.
This is what you came for. This is what you came for. I'm over. This is what you came for. I'm over. This is weird. She said, I'm ready. So come and get me. I'm over here. I'm over here.
So, guys, I was taking a few minutes just to kind of catch up on the news, see what's going on, and I was reading Wall Street on Parade. This is related to GameStop. I was going to do with Occidental Petroleum today. So, Mr. Oxy kind of changing hats for a day and saying, take a look at these things, right? So, let's first look at this one. This is an article from today. I'm going to come back to this one in a minute, February 4th. But this is an article from a few days ago on January the 30th. So, as I said, the source here is Wall Street on Parade, Citizen's Guide to Wall Street. GameStop promoter Gill was no amateur trader. He held sophisticated trading licenses and worked in the financial industry. Yesterday evening, CNN's Erin Burnett, CNN, the source of unbiased news, told millions of viewers that it was amateur traders who had taken on the powerful Wall Street hedge funds to pump up the share of GameStop. The New York Post also called Keith Gill, the man who initiated the frenzy in GameStop shares, an amateur investor. This characterization of Gill fits the broader mainstream media narrative that this is an exciting David versus Goliath story, but unfortunately the facts keep getting in the way. Wall Street on Parade confirms that Keith Patrick Gill is a man who holds sophisticated licenses to trade and supervise others on Wall Street. And he's the same man who is using multiple identities to promote GameStop on social media platforms. Gill and a member of his family have confirmed to other media outlets that Gill used the identity of Deep fucking Value on Reddit's WallStreetBets to promote GameStop, and that he used the identity of Roaring Kitty on his YouTube channel and Twitter page to help engineer a short squeeze against hedge funds that were betting the price of GameStop would fall. So here's the news, man. Gill was a clean-cut registered rep at MassMutual by day and a long-haired, head-banded, fast-talking stock promoter on social media by night, sending out video promotions for GameStop that were filmed at his trading desk that he set up in his basement. See this YouTube video by Gill. There's a hyperlink here. So if you wanted to see this newspaper article here, or this media article here, it's Wall Street on Parade. You can look it up there. This is highly likely to be a serious problem for both Gill and MassMutual. A genuine amateur trader could plead ignorance of industry rules about hyping stocks to the public, but a heavily licensed industry professional cannot. In addition, the broker-dealer unit of MassMutual that employed Gill as a registered rep could potentially face charges of failure to supervise. Wall Street self-regulator FINRA says that Keith Patrick Gill holds the following licenses: Series 7, which allows him to trade stock and corporate bonds for clients; Series 3, which allows him to trade commodities for clients; Series 24, which allows him to function as a branch manager of a brokerage firm and supervise other licensed traders. Gill's FINRA record indicates he began working for MassMutual on or about April 2019, so a couple of years. MassMutual has 30 days to file a separation termination report with FINRA for a licensed broker. That will disclose the reason as to why he had been fired. A little bit of stuff here about WallStreetBets. The largest brokerage firms on Wall Street would never allow a registered rep to use multiple anonymous usernames and promote a $5 stock to mass public audiences, because there would be no way of knowing if it was a suitable investment for the level of risk the individual person could afford to take. That's one of the reasons why many people, including YouTubers like me, say we don't offer financial advice, we just offer financial education. But this guy is a registered rep. The bulk of lawsuits that are brought and won against brokerage firms are for failure to supervise. That's against his employer, MassMutual, or would be. Gill's YouTube video has offered a scrolling statement at the end saying that it was not meant to be personal investment advice, but he was putting it out on YouTube to pretty much anyone who could watch or see it. He has another potential problem. According to media reports, he was posting copies of his brokerage statements at ETrade, showing his GameStop positions making millions of dollars in the short span of time while he was employed at MassMutual. That's the problem. While he was employed at MassMutual under FINRA rules, a licensed broker must first get permission from his broker-dealer where they are employed to open a trading account at another firm. If the employing firm grants that permission, the other brokerage firms must send a duplicate copy of the broker statement to the compliance officer of his current employer. This is to prevent the firm's name from getting dragged through the mud, which is basically what's happening now with MassMutual. Of course, they can say, we didn't know, and FINRA could say, that is called failure to supervise. If MassMutual says we did not know, they are effectively admitting that they failed to supervise one of their registered reps. While some hedge funds like Melvin Capital reportedly lost billions in the short squeeze, other major players on Wall Street made windfalls, and Reuters reports that Blackrock, which owned about 9.2 million shares, could have made upwards of 2.4 billion on the rise of the stock. Anyway, interesting stuff. But how about this one? Same source, right? Wall Street on Parade, if you want to look it up. It's from today. Citadel is paying for order flow from 9 online brokerage firms, not just RobinHood. Well, I'm not really that interested in that particular part of the story. What I am interested in is the later part in the story, sort of towards the bottom. So if you scroll down a bit, just by the way, in case you're interested, according to the 606 report, Citadel ranked as #1 venue for sending both stocks and option orders to RobinHood, TD Ameritrade, Charles Schwab, WeBull, Fidelity Brokerage Services, Ally Investment Securities. Citadel was the #1 venue for options trades by ETrade. But let's scroll down a little bit more. Pay for play in the trading world has worked out well for Griffin. So if I skip that at the top here. Ken Griffin, billionaire Ken Griffin is the founder and owner of Citadel. But here's the thing, right? Pay to play in the trading world has worked out well for Griffin. According to Forbes, he's worth 15 billion. 5 years ago, he was worth 7.6 billion. That's half. So he doubled his net worth in the last 5 years from 7.5 to 15 billion, there or thereabouts. But here's the thing that really interested me. All that dough sloshing around in Griffin's bank accounts has found some interesting destinations. Just ask Treasury Secretary Janet Yellen. Citadel paid Yellen $992,500 for speaking gigs since she stepped down as Fed chair in February of 2018. Guys, do you see how Wall Street works? Independent Fed chair Janet Yellen stepped down as Fed chair in February of 2018. Since then, Citadel paid Yellen about $1 million for speaking gigs. Just 2 of those events, October 17, 2019 and December 3rd, 2019, commanded $292,500 each. $292,500 each for speaking gigs to listen to the exciting Janet Yellen speaking to whomever. At the height of the pandemic, Citadel paid Yellen $337,500 in total to speak at unspecified events on October 9th, 20th, 26th, 27th, 4 times. Yellen's disclosure form also lists a liability to Citadel of between $50,000 and $100,000, owed as a refund for a cancelled event. Why she hasn't paid it back yet is curious. Curious indeed. All of this comes from the jaw-dropping financial disclosure form that Yellen filed with the, try to contain your laughter, I'm just reading, guys, Office of Government Ethics in advance of her Senate Finance Committee confirmation hearing to become U.S. Treasury Secretary. Yellen's cash haul for speaking gigs in 2019 and 2020 came to more than $7 million, most of it coming from Wall Street firms and hedge funds. She did not disclose her speaking fees in 2018. Now she is rumored to be holding together the SEC, the Fed, the Commodity Futures Trading Commission this week to look into the trading at GameStop, in GameStop stocks. In a rational world, she would have recused herself from any matter involving Citadel. But when it comes to matters involving Wall Street, we left that rational world in 1999 with the repeal of Glass-Steagall. I'm not even going to continue reading. I think I'm done reading this stuff here, so I'll just stop right here. I think if you want to look it up, you can read it for yourself. The link's at the top of the page, and I mentioned to you what my recording comes from. There you have it, guys. If I sound a little bit disillusioned, it's probably because I am. Pulverizer A on our YouTube channel the other day said, rigged. That was the entire comment. Rigged, right? What's rigged? Everything's rigged, especially Wall Street. Anyway, I was looking for some good news, and I found some good news. At least Oxy ended up today again. I think it closed at about $22.30. So if you bought Oxy at $56, you're probably not too happy about $22.30. But if you managed to buy some Oxy at $8 or $9, you're probably doing okay. So anyway, on that bright, happy note, this is Mr. Oxy saying, stay strong, be safe, take care. See you next time.